Hello and welcome to this week's What's Hot ahead of the third heat wave of the year. Hosepipe bans being dribbled out countrywide. So let's look at the performance of our three largest publicly traded water stocks from the UK. Let's start with Severn Trent. It pays a dividend of 126 pence a share, whilst at the same time it is reducing spills, leakages and pollutants. United Utilities also highlighting that it's cutting spills and it started work on its 5-year £13 billion plan, the biggest investment in improving water and wastewater infrastructure in more than a century. Dividend, well, it pays 34.57 pence a share. And finally, Pennon Group, which has put up customers' bills for the first time in a decade, in part to fund new reservoirs. And in June, the company predicted that the southwest won't need a hosepipe ban this summer, unlike Yorkshire. Well, last week, Greggs was downgraded by analysts at Barclays, who has downgraded the company's earnings forecast, in part due to the hot weather after the company blamed the heat for weaker than expected trading. But analysts have scoffed at some of those claims, saying not all of the UK experienced the heat, and the company would sell more cold drinks, which would offset the poorer sales in the food. And possibly Greggs has overexpanded and customers have been put off by recent price increases. And it's always the summer when work is being done on the roads, or appears to be, as you manoeuvre traffic cones protecting invisible workers. Well, today the UK government announced £92 billion worth of funding for major road schemes and rail upgrades, which will benefit Kier Group, Costain and Balfour Beatty, for example. More than 50 road and rail upgrades have been approved, with some involved in the widening of the A66 Northern Trans-Pennine Road. And as for my message last week that the demise of the junior market is premature, well, the AIM all-share outperformed the blue chip index last week. Plus, some investors misunderstood an initiative announced by Mkango Resources and had thought that the merging of two of its portfolio constituents meant departure from AIM. Not at all, as explained in my conversation with the chief executive, Will Dawes.
This transactions enables us to, it puts a see-through valuation on these assets, and I think the market reaction has also been very positive. And that's a reflection of that potential for sort of value uplift by listing on Nasdaq. So Mkango will hold a majority interest in the Nasdaq listed entity. Mkango will remain listed in the UK and Canada.
And finally, another sign of confidence in the market is investor support for capital raises and support they did for media tech firm Blackbird, which comfortably raised £2 million. Okay, I hope you're well. That's it for me. I'll be back same time next week.